So I'm a limit type of person. I set my limits beforehand. It could take days to weeks to play out, to fill. I'm a patient person. But there are ways that I play a certain type of trade. So whether it's a limit order or a confirmation order or a breakdown, breakout order, I'll go over those and how I place my entries, stop losses, and TPs. But I do have in my channel a pinned message of how I take profit. Okay, so before I go into that, let me just say the rule. So it's 40, 30, 30. Okay, so TP1 will be 40%, TP2 will be 30%, TP3 will be 30%, and I don't leave any runners. I am fully out at TP3. I don't care if it continues to go up. I will take profit. Now, if TP1 hits, and I'll go over this in examples and charts, but if TP1 hits, you should be moving your stop loss to break even. There's no reason you should be losing after TP1 hits. If you do lose, then you have to go back and assess your risk management. If you do go to sleep with open orders that haven't filled yet, I personally cancel all my open orders. When I go to sleep, if they haven't filled, I wake up and place them. If they have gone, if they filled and are in profit, then the trade is no longer valid. So you have to have your own personal risk management tips in place and you have to follow them. So you can't just, if something is down 3%, 2%, or if a signaler, calls something and you miss it and you try to get in after a good percent move, you're most likely going to get burned. So my style requires patience, and that's how I've been playing it. So I'm going to give some examples on limit orders and how I place them. I will go over confirmation plays. Again, this is in my pinned messages of how to play those. So all this will be recorded, posted on YouTube, and it's in pinned messages. And then I go over what I look for in terms of TPs and how I take profit. So let's start with Sol here. And okay, so my type of or my style of trade is actually supply and demand zones along with support and resistance confluence. So we're going to go back in time, and I know this is hindsight trading, but I'll also give examples of something that hasn't filled and how we play that one. Okay, so these are demand zones. Okay, I have a 2-hour video of how to play these on my YouTube. It's going to take me a while to go over it. This is also what I teach in my class. But these are demand zones, okay? So let's go back in time to, let's say, here, right? So what I look for in terms of plays is I look for consolidation zones, okay? Also known as ranges, okay? So this is once a range before it broke out, and these are where a majority of bids are, okay? So for me to play them, I look for these zones, and I look for support confluences. Okay, so the top of the zone usually is in confluence with some type of support or resistance that is now an SR area. SR is support resistance area that has not been confirmed yet. Okay, so this line here is going to be my entry. Where did I get that from? We had a breakout here. Okay, support. Okay, we reclaimed it. Support, support, support. We reclaimed it, bounced off of it. Now these wicks are meaningless. It's where the candles close. And yes, we bounced off support. We wicked down below, but we closed above. And then we broke down and turned it into resistance after we rejected here. Okay? So someone has a hot mic. Okay. So this is my first entry based on it was previously resistance and we broke out. Okay, so this is now an SR area, meaning it is a support resistance area that has not been flipped to support, and usually these areas offer bounces. Okay.
The Industrial Revolution and its consequences have been a disaster. Industrial Revolution and its consequences have been a disaster for the human race.
What the fuck was that? Okay, outside of a heart attack. So here is how I play it, okay? And my entries always have a 15% allocation. So if I, let's say, have $100 that I am going into the trade with, okay, you have $100 margin, I go in with 15% of that, okay, and this doesn't mean use your whole balance on that trade, okay. So if you have $1,000 in your portfolio and you're allocating yourself $100 into that trade, you're splitting that up this way, okay. So 15% at entry, all right, and then within the zone I have at least one DCA if the zone is big enough. So this zone is actually a dollar or 90 cents difference, okay, from the bottom of the zone to the top. So I have at least 1 or 2 DCAs in this area, all right. So my first one probably comes around here, and you can go on a lower time frame to confirm. So you're looking for support areas, okay. So previously resistance, we broke out, flipped it to support, right? We broke down, broke out, flipped it to support on this wick, so we've confirmed that support. So that is going to be my second DCA, or my first DCA, okay? And at my first DCA, I'm going in with 30 to 35% of the port allocated amount that I have. So if I have $100, $15 is there, $30 to $35 is here, and if I do have a second DCA, it'll be at the bottom of the range, and that's 50 to 55%. Okay, so your remaining balance goes there of the allocated margin that you are going into the trade with, right? Now this could be a 10x leverage, 20x leverage, whatever it is. That's how my breakdowns will always be. Okay, sometimes I don't go in with full 100% allocation. I'll go in with like 20% at entry and maybe like a DCA 140%. So I use 2/3 of my balance that I want to. That's because I'm, accounting for the risk in the trade and the market conditions, right? So this would be your setup. Stop loss below support. So this is your support. So a little bit below that. Okay, now because I'm on a daily, this is going to be considered a swing trade. Anything 4 hours or greater for me is a swing trade, and I can lose up to 5 to 6% of my portfolio if I do end up taking a swing trade. Okay, scalps, you should be risking no more than 2 to 3% of your portfolio. That is with DCAs included. All right, and then the other setup is this one. Now I have this one on a separate chart, so I'll go ahead and show that one, but this would be the setup, okay? Now look, we broke out of this zone on July 23rd, okay? This hasn't filled and we are in August, okay? So it could take some time to fill. Now if we go forward a little bit, it hasn't filled yet, but there's the fill, okay? So you got your entry and you almost got your second DC or your first DCA, okay? So, but not necessarily, okay? Now, before you do that, you have to like first plot out your supports, which we did, and then your resistances. So resistance first comes here. This is your TP1, and TPs are not always guaranteed to hit. So if you have good profits that you're sitting in, so if the trade's up, like for example, from entry to current price, we're up 10%, okay? Even 5% is a lot of money. Okay, on 10x it's 50x or 50%. So this was TP1. Why? This was a previous support, okay, that we lost and turned into resistance, right? So here was the flip. We lost it. We actually didn't turn to resistance here. We broke out. So this is TP1. TP2 comes here. Okay, this is resistance. Rejected, rejected, broke down, confirmed the resistance. That's TP2. And TP3 probably somewhere here. Okay, now it doesn't matter how high I draw this profit bar up. It really doesn't matter. It's about where your TPs are set. Okay, so TP1 had hit there. I'd move my stop loss to break even. So if it does come back down, okay, you're out in profits. Okay, it hasn't hit. That's where it stopped you out, because you should have been already at break even, right? Now, I won't go into details about supply and demand zones because that takes a while, but this setup is still valid. Why? Support is still holding. Okay, so this top, this is no longer a zone. You lose confluence. Again, details are in that 2-hour video, but support is still holding. Okay, so this is support, and this is support. So you can take this same exact setup, risking the same exact amounts with the same exact stop loss. Okay, if I continue to go more forward, we see that not only has your entry filled, but your DCA. Okay, and because your DCA is heavier than your initial entry, your average should be closer to that DCA point. Okay, you can do math. It'll be somewhere here. It'll be below the middle, so close to here. Okay, and look at that. From your average entry, because you DCA'd, you are up 6%. Now, TP1 is here, okay, but you have to adjust as you go. This was the TP for the first trade that filled on the 22nd, okay? This one just filled the past few days, so you have to adjust. So because we have no data back here on lower time frames, you have to go on a lower time frame, say the 2-hour, and we see that we have resistance here. There's TP1, okay? Previously resistance, it was support, right? We lost it, resistance. Then we broke down and never retested it. When we did retest it, we rejected. So there's TP2 and TP3 probably somewhere up here. Okay, so your TP1 hit, your TP2 hit. After your TP1 had hit, you'd move your stop loss to your break-even point, which is this, since your DCA had now filled. TP2 hit, you move break-even to TP1. Okay. At each TP, you shave off your entry. So again, for those that weren't here at the beginning, TP1, I shave off 40%. Why 40%? It is the most likeliest to get hit of all three, or however many you have, so you shave off the most. Okay, so 40% shaved off there. Stop loss moved from down here to my average, or my break-even point. Once TP2 hits, you'd have taken 30% off. Your stop loss moves from your break-even point to TP1, okay, and it hasn't come down since, so I'm still technically in the trade. If it goes to TP3, I shave off the remainder of I close the whole entire position, okay. This would be a 10% move almost, and you have 30% remaining currently, so if it comes back down to TP1, you're out in profit regardless. Okay, now that was just off this one demand zone. Okay, it had filled originally back here and did go up 10%. But the supports are still valid, so you can play this until you lose these areas. Okay, we broke down from here, but we were able to reclaim it. Right? But because we've had so many touches, and this would be now an SR point, your setup's going to look a little bit different. You wouldn't play this, right? So if you were to go in with the same exact setup, or same entry, your setup is now this, okay? Below these wicks is going to be your stop loss. Your entry is going to be the same exact entry point. It's now an SR area. Okay, we lost it. We turned into resistance briefly right there. Okay, and then we broke out, but we have never reclaimed it. Okay. So if you were playing this setup, your entry would be 19.55, stop loss 18.9, and if you want a DCA, you DCA at support, so probably there. Okay. Your risk is about 3.5% with the DCA fill. And then you have to go on lower time frames to find those resistances. Okay. So TP1 would still be the same. TP2 probably there. And TP3 probably there. So that's how you would play a demand zone once it is filled. Now we do have this one here, Okay, and I have this same exact play charted already. Now this is a demand zone that I'm looking to play. Now it's a daily demand zone actually. Okay, my entries at the top. I have some confluence here. I have the golden pocket as my DCA. Right. On top of that, your other confluence would be another retest of this trend line. Right. So I have 3 confluences backing my thesis. So it makes me comfortable in taking it. However, we see that the risk from entry to stop loss is 12%. Okay. So now that you have, let's say, $100 that you want to allocate on this play, right? Your risk is 12%. Okay, so if your stop loss hits, whatever it is, it's going to be pretty painful. So you have to lower your position sizes. Okay, that means if you were going in with the 15, 30, 35, 50, 55 rule that I had, you now have to switch it up to go into like maybe 10% entry. Okay, your DCA is going to be like 20%, and your last DCA, if you choose to take it, is going to be like 30 or 40%. So you've lowered your risk from 100% allocation to 70% allocation, which reduces your risk. Okay. Now I can go into, what everyone's going to put at each point because everyone's portfolio balance are a little different. But there is a calculator you can get to calculate your averages after every single fill, right? And then you have the calculator for each exchange you're using that you can calculate how much you would lose if stop loss hits after your average fills. So that's going to be different for everyone, but that's how I would play it. Okay, so these are separate types of plays. These are limit orders, okay, because I know that the consolidation area is pretty long, just like this one. You've had 4 to 5 candles in the zone. This one has more. The more candles in a consolidation zone, the stronger the zone is going to be, right? So for me, this is a limit order that I've placed at 1767. I also gave this call in my channel. I think it was like 2 weeks ago. I'm still waiting for it. And that's a limit order that I'm waiting for. Okay, so you're looking for areas of support, and the more confluence you can find, that's where you're going to place your bids. Okay, you want to place your bids at levels of support and not blindly. Right? That's why I don't market long anything. Now let's talk about confirmation plays. Okay, there are 2 kinds. You have breakdowns and breakouts, okay, and you have SR flips, right? And I'll go over both those, but first we're going to go through breakdowns and breakouts. So Matic is the coin. We see that we have many examples of breakdowns, okay? So it's a trend. We're bouncing off the trend until it breaks down. Okay, and there are 2 ways to play this, right? But again, unique confluence. So this is resistance, right? Here we rejected, we deviated, we broke out, flipped it to support briefly, continued higher, right? Again, this was support, broke out, and then deviated, came back down, and there we go. Okay. So when you have these types of breakdowns, or trends that they've lost trend, I typically have 2 ways of playing this. My most favorite setup would be a breakdown and retest. Okay, so that means we break down, which we did here. So this one broke down, but look, the wick only broke down. We still closed above. This one here broke down. Okay, we went back up to retest. We rejected on that, so that's confirmation that this is resistance. Okay, so once that happens, you have a confirmation. These are for scalpers and those that are watching these trades. Okay, you would market short with your stop loss somewhere above resistance, so here. Okay, once we reject, and you can have a tighter stop loss if you want. You can go on a lower time frame depending on what your risk tolerance is. Like this would probably be your stop loss. Okay. Now this is a daily. Once we lost there, we rejected, market short, stop loss above there. Okay, and you're going to take profits at levels of support. So let me draw my supports. And there. Okay, why did I choose that? This was previously resistance, right? We rejected, we flipped it to support briefly, but again we fell back down, flipped it to support there. So this is support here, and this is where the first TP should have been taken. Okay, so you would have gone in market short, and you always want to go in with a low, lower entry position sizing compared to your DCAs. You would have DCA'd somewhere here at levels of resistance. So if this continued to go higher, right, that's where you would have DCA'd. And if it reclaims this trend line, meaning if there was a close above, okay, you can cut your short for a small loss. Right, that's why you go in with a very light entry to allow yourself room to breathe if this continues to go higher. Okay, so TP1 had hit, 40% trimmed, you'd move your stop loss to break even. This continued to go lower, TP2 hit, and TP3 hit. Okay, you would have never been stopped out, even if you moved your stop loss to break even. After this one hit, right, or sorry, TP2 hit, you'd move your stop loss to TP1, you would have not been stopped out, and then it continued to go lower. Okay, so this gave you a 24% move. Now, what if you want to add to your position because this didn't go higher, right? Now you would add to your position on confirmed SR flips. So this was support, right? We took profit here, right? This went higher, came back down, rejected there, right? So you could add it to your position here, and because you've added, your average comes from here to probably somewhere there. That means you'd have to adjust your stop loss. Okay, so if your stop loss was here, you'd have to go probably there because your average is now here. So stop loss would go there. If this goes back to stop you out, it's either going to be break even or for a small loss because you've already taken profit, right? So if you add to your position here, your average goes from here to now here. We'll make it blue. Okay. Stop loss hasn't hit. We went a little bit higher, but now you have more. And TP1 hit, TP2 hit. Right? So you add to your positions on the way down once supports become resistances. Just like when you DC on the way up, you DC at levels of supports, right? So that's how you play a breakdown. Now, what if we never get a retest? Okay, because retests happen about 60 to 70% of the time. Now, this has confluence. Like, you can't just short something or long something because it broke out or it retested. You need, like, confluence, right? So if I were to remove these lines, here is the breakdown. This was support, right? We broke out, flipped it to support, bounced off support. Okay, again, we broke out, flipped it to support. So now this becomes resistance here. So this would have been a line that I would have had on my chart. Okay, we flipped it to support. So once we broke down, this becomes an SR area. Okay, because we haven't actually confirmed this resistance. But look, we rejected not only on the bearish retest point of this trend line, but also horizontal resistance, confirming that this is now resistance. So now you have two confluences backing your trade idea, right? That's why you take the short. Now if you missed this one, if you missed the short on the retest, look, you got another chance here. It came and rejected from resistance. Okay, so what if it doesn't have a retest point? What do you do then, right? You can always enter in with a small amount if it breaks down, just in case we don't get that retest point, right? You can always have that happen. So you can enter in with like 10% or 15%, and you can always cut it short if it reclaims the trend line. Because look at here, right? We broke down and never retested. We broke down here, never retested. However, we did come back and test the resistance line. Right? It was previously resistance here. Right? We flipped it to support briefly. Same here. We went up, came down, retested it, confirmed resistance. Same here. This was a deviation. We never flipped this to support. And we went back down, came up, and retested the horizontal resistance. Right? So if you missed this breakdown, hopefully you had this line drawn, because this is your daily resistance, and we rejected from it. Right? So you can enter or market short with a small amount, and you can always add to your positions on the way down once supports become lost. And look at that. So this never retested the breakdown point or this retest of this trend line, but it retested the horizontal resistance. But it did take some while for that to play out. So this would have been a limit order because we've had this resistance confirmed. These would have been market shorts. These would have been market shorts. This would have been a market short on confirmation. So your setup, if you had entered in on a market short, right, would have been very tight. Whoops. There's your breakdown, stop loss above resistance. Right. You go on a lower time frame. Okay. Look at that. On a lower time frame, this broke down, rejected. That was your market short entry. Same stop loss. So you might not have the retest on the daily, but if you go on a lower time frame, you can catch it. Right? So beautifully came back down, closed below, rejected, closed below. There was your short, stop loss above there, and you got a nice move down. Let's see, did this one have it? This one broke down here, so if you had market shorted after it rejected here, right, you could have closed it after it reclaimed, so it would have been a small loss. Right? You're not going to win these all the time. That's why I don't like to play breakdowns as much. But this one didn't have a retest. This one did on a lower time frame. That would have been your setup. Stop loss above resistance. Came back down. Died. There's your limit short, right? Resistance. Rejected. Died. And same thing for breakouts, right? So I was giving this example of UNFI. Okay. So here is the 4 hour for UNFI. Right? We have a bull flag forming, but first, look, it bounced perfectly from that demand zone and up like 8%. Okay, that's a limit order. That's how I play my demand zones. Right? But here's a potential breakout play. Okay, here's a bull flag. So you're not going to long this right here. The safest play would be a breakout, retest, hold, and then you long. Okay, so it needs to break out. Retest needs to be above this. Close above, and then you long with a very tight stop loss. Now I can't give you that stop loss placement because it hasn't happened yet, but that's how it would be. Okay, so those are breakouts and breakdowns. We have the limit orders. The next and last confirmation play that I get into are SR flips. Okay, so this wasn't actually a good example of one. Why? Let's go back. And it was a 4 hour one. So this line here, this 8.47, okay, it was a rejection point, and if I go further back, it's probably resistance. Yeah. See, resistance, 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 right? We rejected from it. Let's go on a lower time frame. We had this breakout here, okay? So this becomes an SR area once we break out, okay? This candle here confirmed that support, okay? Yes, we had the wick down, but we closed above. I don't care about the wicks. I care about the candle closes, okay? So there's the confirmed support. Again, we confirmed it here, but then we lost it, right? So if I were to fast forward, we see that at this point, this becomes an SR point because we've lost it. So we're waiting to see if this becomes a confirmed resistance. And again, for that to happen, you reject, close below, okay? And if we reject and close below, that's confirmed resistance, just like here, right? We retested it, rejected, closed below, and then dumped, right? So for me to long, I need this to get flipped. Okay, so you need a 4-hour closure or 4-hour breakout candle, the retest candle, and close above, you can long. Right? So here we go. Let's go ahead and fast forward. Here is your breakout candle. Look, we closed above. Okay? There's the retest. Yes, we came back down, but we closed above here. So on a lower time frame, and this would be a scalp, right? On a lower time frame, you would have market longed as soon as we closed above. And if you had done so, you got yourself a nice 5% move. So this was a 4-hour confirmation play, but you're going to take a low time frame trade because this coin's, first of all, very volatile. But you can also wait for this 4-hour to close above, possible long. However, it's going to be a risky one because it's at a trend line. Okay, we rejected there, rejected here, and possible breakout attempt here failed. So that's why if you're looking for a long, you want to wait until this 4-hour closes above, right? Retests and hold, then you would mark it long with a tight stop loss. Hasn't happened yet. Can you all hear me? Someone says there's no voice. So the minimum risk to reward I look for is 3-to-1, but it doesn't necessarily mean I'm going to wait until my first TP hits, okay? Like for Sol, right? If I have a 3% move or a 2% move, I don't care where my TP is. I'm taking profit, right? Now, that's a scalp trade, right? Because I can hold, for example, I gave this PYR call, right? TP1 had hit, but you don't necessarily have to wait for a 12% move. If you are happy with a 5 to 6% move, please take profit. Don't wait for someone to tell you when to take profit, right? But I typically like to look for at least a 2.5R or a 3R trade. I trim 40% at TP1. Again, how I trade and my, one sec, let me link that for you guys. Pinned messages, everything is there. Let me go to, just so you guys have this. My Discord's frozen. One sec. Sorry guys, I got booted. One sec. here is the Discord link of how I set my trades and how much I take profit. So those are the different types of trades that I take. Confirmation plays, you have to wait until you get the confirmation to long or short. And then limit orders are the way I play. So, you know, when I post something, I'm like, hey, we're waiting for this flip to happen. I might not be there when it happens. So, I've had many trades that I wasn't here for when it confirmed the flip or when it swing failured. But hopefully, you know, this helps explain why a trade is taken, or when, you know, myself or I know Neil has a lot of confirmed trades or an SFPs or, you know, flips of some sort. It's basically what I'm talking about. Now that that's done, I have about 20 minutes that I can go over charts. What do you guys want to see? First of all, since a lot of you guys are in the 88 trade, 88 kind of looks bullish to me, has a possible daily double bottom. Okay, so I wouldn't short. I'm personally not short either. If this flips, this breakdown, which it's been rejecting, if this flips, right, and that's along with your stops below here. Blur. This looks like dog shit. Let's take a look. So we have resistance here, right? We broke down, flipped it to support, right? And then we confirmed resistance. So if I was taking a short, that's where I would take it. We possibly have a breakout coming too. If this breaks out, you might get like a 10% move on it. Yeah. So these are the two areas that I'd be looking to short. Setups would look something like this. And this one is going to be risky because if it does break out, it's just going to zoom. But this would be a scalp short, something like maybe tighter stop loss. So something like that. I'm not taking any of these. These aren't coins that I trade personally, so I'll just post these charts here. And if it does break out, right, there's the you're waiting for the confirmation. Here is a 4-hour supply zone. We rejected from it. So if it does break out here, then you're waiting for a retest point, long with stops somewhere like a 1 to 2% stop. It's like somewhere here. I can't give that to you because I don't know where the retest point is going to happen. ARB. So I'm just in my ARB spot trade. I'm waiting for these levels to hit. Again, another coin putting in new lows. Let's take a look at this on the 4-hour. Okay, so there's your resistance, or at least your 4-hour resistance. Okay, we broke down, turned it into resistance, confirmed, right? Then we rejected from it. So for me, you also have this. So if this breaks down, right, here's a confirmation play, breaks down, retest, then you short. But this looks like a wedge forming. So as long as it holds the trend line, it's a possible long attempt, right? So possibly long there with very tight stops to up here. Breaks down, you short. If it flips this to support, you long, and we can long to probably 95. But it also does look like, yeah, it should reject there again. It's going to be another retest of the trend line, the downtrend. Let's see what's lower time frame. Yeah, this rejected perfectly from the 2-hour OB, and this is a liquidity pocket, so it should reject from here. So another short attempt could be taken something like that. So I'll post this. Here is ARB. FLM. Whoops. Let's use... What the fuck? What happened here? Alright. Oh, this is scammy. I can already tell. I stay away from coins that have wicks like this. But, let's see. This just broke out. It's at a very crucial point. Right, we haven't flipped this to support since here. Actually, briefly here. So, it either rejects and dies from here, or if it flips this on the weekly, we should go higher. This is weekly resistance. Yes, you could have these wicks above. It actually rejected perfectly. The low time frame is going to be hard. I think, what is... One sec. What is the spot price of this? Oh yeah, spot's leading. Okay, so spot's leading. This is probably highly negative in funding fees, right? So it's going to be squeezed. Low time frame looks to be flipping this into support. So we're also putting in higher highs, higher lows. This could continue to go, as long as the spot price is leading, this could continue to go higher. Okay, so this is fueled by shorts. Everyone's trying to short it. You're gonna get longs. You're gonna get paid to long. Spots leading. I wouldn't short this right now. Let's see. Let's see. Possible entry point. Oh, it came back and almost touched it. I was going to say this golden pocket area, but it came back and almost touched it. Low time frame. Let's do it from here. I wouldn't be surprised if this continues to take out the or recover the wick here, but what I don't like is that it's putting in a rounded top, and whenever I see rounded tops, I stay away from the coin. If this loses and turns this into resistance, you could possibly take a scalp short. It's going to be very risky because spot's leading, but that would be your setup. The risk to reward isn't great, and your chances of getting stopped out are pretty high. I personally would stay away from this coin, but that would be your setup. No, it's not. It's not a. It's not a current market price short. It's a confirmation short. So don't short it right now. FET. Hold on. Do you use Coin Screener for volatility? No, I use no indicators whatsoever. No screeners whatsoever. How reliable is a retest support resistance signal indicator on TradingView? No idea. I don't use it. I like my charts naked like I like my women. Alright, let's take a look. FET. Alright. FET. Alright. FET, this is resistance, right? We broke out, failed to flip it, rejected, 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 rejected. Very important place to hold currently. Okay. Again, the daily looks disgusting. Sorry, someone has a hot mic. I'm gonna mute this person. So it's very important. We flipped it to support here, okay? But FET looks on the daily bearish at least. We have a bearish engulfing candle, meaning that this red candle is bigger than this previous green candle. Okay, low time frame, it's cupping, or at least it's putting in a rounded top. Okay, so if this loses this and turns it into resistance, that's a short with a very tight stop loss. Now I know that I said tight stop loss, but this is your resistance. Stop loss above there. You have to minimize your risk if you're taking a scalp, that you are risking no more than 2 to 3% of your portfolio if your stop loss gets hit. Okay, TP1 would probably come here. TP2 here. TP3. Let's front run that a little bit. I think it's too easy. Now, again, very important, daily close. What can happen is on the daily, right, we could go back up, possibly retest here. So let's go on the 4 hour. We could go back up. This is a 4 hour support, right? We broke out, flipped it to support. So 4 hour can go retest that. So that could be a better short. So something like this if it rejects with a very tight stop loss. So 2 different plays, 2 different confirmations. These aren't limit orders, by the way. Okay, so you need the breakdown to happen, turn this into resistance to short, or you need the rejection here to happen, close below, and then you'd short with your stop loss above here. Let me post these. All right, let me see. Okay. So Ruin bounced from support. Hold on, let me see this on the daily. I am not charting Harry Potter, whatever the fuck that is. Okay. This chart looks weird. I just don't like how it's been, you know, on the daily, right? Elevator up and then staircase down. Because this tells me that this might nuke. But there is the daily order block, or the 4-hour order block. So possible short attempt can be taken there. Back to here. You also have resistance here, so that's where your DCA would be. Why won't this come? Okay. So here's your range before it broke out. We got back below. Again, here's your range. So you're going to play the range over and over again until it breaks down. Possible long attempts can be taken at this order block. Stop loss below here. And there you go. If this flips you long, if you get stopped out here, right? Otherwise, if this turns this into resistance, then you short. So there's Ruin. XRP. This coin's not dead yet. Alright. Looks pretty dead to me. Let's take a look. Yeah, this is just range bound. You're going to have to play the range until broken. Okay, so here is your range lows. Let me do... And here is your range high. Okay, here is your mid-range, which is also an SR level. Right, we flipped it to support. We broke down, haven't confirmed. So there is your mid-range. You can play the range, right? So long range lows until broken. Now this could actually go and take out these lows here. So let's actually front run that by a little bit. This would be your long setup. Let's put our stop loss there. Back to range highs. You're going to short range highs until broken. Maybe... Yep. And mid-range is always tricky, but we possibly have a trend line breakdown. So if this, the risk to reward is not there for me. Like, it's a very minimal movement, but retest, breakdown, stop loss, like somewhere above here. It's a 2.3R trade. Arkham. Up that spot. This chart looks disgusting. Yeah, with these low cap coins, it's very hard to do TA because they don't respect anything, but there is a supply zone here. No trend line. Yep, that's your resistance line. Possible short can be taken if it goes here. However, I would love if it got back up to here, to short. The reason for that is because, one sec, let me find the chart. I know I shared this here once. One sec. It's called the bearish Quasimodo pattern. If you guys have seen my videos, I do mention it a couple times. But basically you have a higher high, higher low, higher high, lower low, and then it goes back up to make a lower high. And the lower high is at the neckline. So it looks like, here I found the chart. Oops. Copy. Okay, so higher high, right? Higher low. Here's your higher high. Here's your lower low. If it goes back up to your lower high, which is at the neckline, which is also resistance, resistance, confirmed resistance, you take a short there. Stop loss placement's very, very hard on this one because there's not much data, but probably up there. And then just send this to new lows. I don't even know what this coin is, but to zero with it. If you're looking to long, possibly long this order block, stops below, and you long get back up to resistance. Okay, I got two more coins. I gotta head back to work here. ADA I already went over. I already covered Sol. One sec. H-bar. H-bar and Bell are the last two coins. Okay. Very important level for H-bar. Right? It was previously resistance here. Okay. We broke down, reclaimed it once it cupped. Okay, so we went higher. Then reclaimed it here, went higher. Reclaimed it here, went higher. We had an SR attempt bounce, but now it's putting in another cup. So if this holds, we should see it go to at least there, which is also confirmed resistance after that rejection. The daily, this is a reversing candle, yesterday's daily. This daily is putting in a bearish or a bullish engulfing. And let's get rid of that for now. We need to close above this to continue higher. 4.9, close above because we haven't, right? We broke down, but we hadn't had any closes above since here. So we need to reclaim it, and then we could possibly go to here. But if that loses, then the next long comes at this order block. This is broken market structure. Yeah, so it needs to hold there, otherwise it's making new lows. That's where I look to long. Otherwise, flip this, then you'd long to there. It won't move much, but it's a harsh move down. It's consolidating. So again, it's cupping under resistance, which it did here, and it did here. So, you know, if we're playing fractals from previous, then it should go higher. Sorry, I can't give whether or not you should exit or enter a trade. H-bar, I don't know who posted it, but I'm just going to call it. So last but not least, Bell. Man, these coins are disgusting. I only trade high cap coins, I never look at these.
Vas-y, regarde, j'ai des mis.
Sailor, merci beaucoup, mon frère. C'est méchant. Merci, 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 merci. Wesh, les gars, wesh.
Ouais, les gars.
Gros, on n'est que 5.
Goodbye. He's having trouble with the bathroom or something, man. He's aggravating. Alright, Alright. Okay, so if we take a look at Bell on the daily, this is the order block that it needs to hold. Okay, here is your resistance. That's an ugly ass color. See, it was previously support, right? We lost it, reclaimed it, and then we confirmed. So this is resistance. No longs, in my opinion, until this is taken, or at least on this order block. However, this is a very scammy coin. By that I mean the wicks, right? So I would love to see if it honestly dips below, holds the trend line, and then reclaims this order block to long. I wouldn't set bids here on this order block because the space away from the current price action to the order block is not much. Okay, so I would like to see it go and touch the trend line one more time. It could take a while for this to happen, but low time frame, I see nothing happening. So I truly don't know how to play these liquid coins. You could wait until it goes and retests this, which is also 2-hour resistance, right? So you can play it stops above and target this order block. But I see nothing to get into a play on this. Alright, so here's Bell. Alright guys, I gotta head out. So I'll go ahead and upload this to YouTube for those that missed it. Again, stuff on how to play this linked under my pinned messages. And yeah, we'll take it from there. So I'll see you guys later. Thanks everyone.